So the market may have recovered from most of the early tariff disruption, but the American duties will weigh on Canadian growth. A report from Deloitte says it will be the most damaging to our growth. Dawn Desjardins joins us now. She's the chief economist for Deloitte Canada. And we begin with this tariff discussion being the biggest threat. Do you still see it that way for the second half of the year?
Well, we do until we get clarity on what the exact relationship is. Right now, we're benefiting in some way because we do have our carve-outs associated with the Canadian, U.S. and Mexican trade agreement, where if we're compliant, our goods go over tariff-free. So that's good. Mm-hmm. We do have steel and aluminum, of course, lumber, finished autos that are still facing some very high tariffs, and that is definitely impacting those industries. But overall, what we're thinking is we need to have something just a little clearer for businesses to be able to be confident and put some money to work in the economy. Definitely, you feel right now they don't have that confidence. Exactly. And when we look at any surveys about what businesses are telling us, they're saying, probably not a good time to put money to work. And by the way, probably not going to be hiring that much either. And we are seeing that in the labor data. Our unemployment rate has risen. We really haven't created any jobs since January of this year. And so that has the impact of reducing consumer confidence. And again, rippling down and another depressant in terms of the pace of economic activity.
Where do you expect growth to land for the second half of the year and the start of next year if you've looked that far?
Well, we have two negative quarters in the second and the third, but we do have a recovery in the fourth quarter. And it's based on an assumption, and I have to tell you, it is an assumption, that we do have clarity about our relationship with our largest trading partner. Furthermore, we do think we're going to have some more tangible information about how governments are going to put money to work in the economy, whether it's increasing their infrastructure budgets, it's reducing interprovincial trade barriers, changing the way we apply for permits and how long those permits take. All of those things really signaling to businesses that they can put money to work in Canada, get a return on investment in a reasonable time frame. So really working to be a support for business investment.
What regions do you see being the most affected by the tariff shakeout?
Well, right now we have Ontario and Quebec barely growing. And this reflects a few things. One, of course, is that they do have manufacturing and steel and aluminum. So they are definitely where they're in the eye of the storm in terms of the tariffs. Additionally, we're seeing so many fewer people come to Canada. That's across the country, obviously, but it will have a significant impact on Ontario in particular. So we see the slowing in population, slowing in our labor force, and therefore slowing in consumer spending.
You mentioned unemployment. We are at 7% last check. You mentioned we haven't really created many jobs, if any, since January. Where do you see unemployment going moving forward? Will it get higher?
We think it'll probably top out at about 7.3%. So it's not a lot higher, and it's simply to say that we don't have massive job losses associated with this forecast. It's very much almost a protection against not expanding for businesses. They're not looking to cut their labor forces significantly. Some will have to, simply because as the steel and aluminum industry is, we're just not seeing the demand. So we will see some job losses, but at the other side, we do think we're going to get that lift. And once that happens, we will see the unemployment rate start to edge back down. But I think in the near term, it's going to be tough.
Bill C-5, of course, is the government's plan to get some of those big infrastructure projects built quickly. You mentioned permits and how much of a problem that can be, timelines stretching out over decades. Will C-5 be the big sort of boost to the economy that will somewhat qualify the effect of the tariffs?
Well, I think if we do see significant buy-in to this idea that Canada has to up its game, that we have to be able to attract capital, because global capital is very fluid and will only go where they anticipate getting the best and the quickest returns. So if we see signals that bills such as this, that in fact are going to be supportive for business growth, I think that's a good sign. I think that's a good starting place. Will it be the end-all, be-all? No. And none of this happens quickly.
I was going to say, will any of it come in time, right? If we see the tariff shakeout at the end of the year, and government doesn't sit again until September, how much time will it take for that money to get rolling?
Yeah, and I think it's a signaling, too. Like, when we think about it, if the government is committed to putting X billion into the economy to create a pipeline, a rail line, whatever it is, it's a signaling for businesses. And I think that's what they're looking for. They're looking for some sense of optimism that, okay, we're going to move on. We're going to create a better environment for investment. And if you put that together with a sense that maybe we don't have any big risks of more tariffs coming, and perhaps this relationship we have with the U.S. right now, with our carve-outs, and the ability of our goods to travel to the U.S. basically tariff-free at this point, because 95%, I believe, of our goods could be without tariffs. If that persists and we get some further assurance on that, they will comply with our agreement, I think those two factors together should be sufficient to lift business investment up.
Okay, but as you mentioned, there's a big assumption in there that we'll get some clarity, and we just don't know. That's the problem.
Exactly.
Yeah.